Hello, hello, ciao, ciao. I have something very special for you today. I have to give some energy to these videos, otherwise I look like I'm dying. Alright, I have something very special for you today. Everybody asked me to talk about... Let me remove this old music. I hear it. Okay, everybody asked me about what is this crazy setup where you catch these 100 points, 200 points, 80 points moves consistently. It has happened. I caught 80 plus points, sometimes 150 every day for the past 6 days. I do take losses, and not a small number, but I do catch some insane runs, and the setup that has allowed me to take this has been what we have dubbed the AFOP, and I want to go through it and teach it to you with like a formal video on it. So let's have a look. I created a nice infographic for you, so let me know what you think of it. So let's go. All right, the AFOP setup. I was asking ChatGPT to give me some nice acronym for this, but in the end I thought if we just remove AF, it's the OP setup. It's it's when the rocket takes off and you have no drawdown and you make 100 points. That's the OP setup. That's how I think a good name for it, right? It's a great name for it. So I created a presentation. I took the canvas was one of the trades I took from the 16th of January, and first I explained to you the sketch, the process of how this crazy OP setup is created, and then we'll see a live example and analyze it. And there's a few wrinkles and a few variations. We'll see if we have time to go through it. So here's the thing. Let me move this out. Okay, I see a rocket. I'll teach you how to catch this rocket. I'm not kidding. That's the rocket I've been catching 6 days in a row. And there's the actual full pattern that you see here does happen 2-3 times a day. You have to be in the right place at the right time to catch it. So if you have FOMO that you have to enter at every swing, at every broken market structure flip, you might have troubles because you take a lot of losses. But if you manage to identify correctly when is the right moment, and there's a few things you can do to identify it, and I will tell you, then this is a crazy setup, because it's not a 1 hour, it's not a 2 hour. It is sad if it's only 2 hour, right? This is the multiplier. This is the multiplier. You can sometimes enter with 5 point stop and it runs for 100. It has happened. Okay. A little bit of a fake stick chart of a situation, and we'll see that it's exactly what I have. Actually, maybe I'll show you. Yeah, it's exactly this part of the chart, 16th of January. So I try to reconstruct it, and we go through exactly how the market structure, it seems like a random noise. It goes a little bit down and then it goes up, and we need to build a context around what we're seeing, what the candles and the market structure and the order flow is telling us. And if you build the right narrative, then you can catch that crazy run. Okay? All right. Let's go through it. So there's some candles going down. We have a retracement, a pullback, and then we break structure to the downside. So we say, okay, we're bearish. You zoom out of the chart and you see we're bearish. We do it a couple of times. Then at one point, so this is a bearish zone that should hold price, but we go above it. So this is a key moment where, after a lot of bearish movement, it depends on of course, also on the resolution, the time frame of the candles you're looking at. Some flips, this bullish flip sometimes mean nothing. In higher time frames, this intention, the market structure shift, or flips, as in some contexts are called, those have real value. And so here's the first hint that something changes. So you actually have a zone that's been violated. Now, often, an additional confirmation that the market structure has really flipped to bullish, even though a lot of the movement that comes afterwards will not be convincing, is that there's also some area of control, some area responsible for breaking the structure. And I think I drew it here. Yeah, right. So sometimes I couldn't do it as I was drawing it, and there's some details that I missed. Sometimes there is an area, a pullback, that is an accumulation before we go down and break the structure. So when that point is violated, provided that the market structure above and the structure above is, allows for this to be the point that tells us, once we close above it, it's an indication that maybe the entire order flow has switched. Our dear AFOP, we used to call them the doors of the order flow. All right. So from this point onwards, people in the know, or if you're tracking order flow and you have had some experience looking at how price actually reverses, you could say, okay, I think we are tentatively, order flow wise, bullish. Okay. Now it gets very hard because this can be 10 a.m. and everybody's very excited that finally we did flip and we're going to run. And they are dreaming and they are opening positions. And I'm in a few communities, and when this was happening, people were trying the longs. There were people trying the shorts. There were a lot of unhappy and frustrated traders because price does not move in a straight line. Anyway. Now, the highest return, let's say the highest leverage or the highest, I say more explosive moves, and also the ones that allow for risk management to be very small, are the ones that start at the origin of moves. So what's the origin of this structure that we broke to the bullish side? What's the origin of this move? It's around here, right? Let me draw it. The origin is around here. So it is often, let's see if I have it. Okay, let's call this the origin. People will call it an order block. It's the last up move before going down, and there's something in this side that goes like this. Let's see if I can do it properly, like this. Sort of a wrinkle, a small pullback there. This tells us that this is the last down move before we move up. We create, a tiny flip in there. Maybe a fractal is just maybe two candles that done, the close of a candle that moves up a little bit. It's a wick. And you can call this the origin of the move. Okay. So now, here are the steps to identify a possible OP setup. You have to have a first tap or a close proximity touch of that origin, right? This sometimes can also be here. So don't get too fast if it doesn't come back to, it doesn't matter. It is nice when this step happens inside the origin. It means it has a higher probability. It means that the people that created these order blocks, let's say entities, hedge funds, the market maker, have orders that they still need to put to the market. So as soon as we come back in here, it's a band, people start buying and price bounces back up. Now it makes an attempt to continue and it does a double top and it fails to close above. So where's the next direction we're going? We're going down. So we come back down. So what do we do? So we tap for the first time, we tap that initial dip into the origin or close to the origin. That's what we call the first step. The AFOP consists of, maybe I should have said it before, we'll review it afterwards. The AFOP is defined by, a sweep of liquidity and then the sweep of the sweep. So we want the area, that the price that's been swept, to be swept again. And then once that happens, we're looking for our entry. With the second tap has to be inside the origin, and usually there's a detail here which I don't know if yes. So what I like, the actual absolute best setup is where around this area you have a flip through this second tap, a so-called double bottom, and then that is really the double bottom here. That is really the signature that price might flip there. Now everybody, I've seen it because my friends are telling me, oh, finally, you know, this happens all the time, you know. Oh, finally we're taking this low. Finally we're taking this low. Everybody's opening positions. Some, not everybody. People in the know will take the longs here. But it does happen that people at this pullback, they will go, oh, finally, I can enter on an imbalance here, order block or whatever, and they will go short. And what they missed is that there's a lot of orders waiting here to be paired for the long, because they had started accumulating here and they haven't finished. So when you see second tap and a flip through this second tap, and this move, of course, you want it to see energetic. You want the move to be energetic. It will create an imbalance, so fair value gap, close above it. This is where you can start opening positions. Or if you want to be a little bit more conservative and don't believe it yet, you can enter at the formal flip when basically this, which is the S and the R, this would be the S and the R. This is the area that would break this low, the area responsible for breaking this low. When we break above it, that's a confirmation that the order flow has changed. So then you can take the longs. You can take the longs above the inverted fair value gap. You can take the entries above the S and the R flip, the flip above the S and the R. And what other errors do I have for you? Let's see. Yeah, okay. That's the tip of how to identify when is this happening. So people like us, we trade the seconds chart and we want to trade the whole day. Institutions, big entities, and algorithms will wait for the hourly closes to decide if to enter the market or not. So a lot of volume enters the market at the turn of the hours. And some people have codified, you know, shout out to Hydra, a great trader that I followed for a while. Codified, and of course ICT. Well, no, I should mention first ICT. ICT, the inventor of the macros, or at least the revealer of macro times. So at the turn of the hour, there's an injection of volatility that happens at specific times. I don't have a video on macros, look it up. They're pretty well known. Go check ICT videos on macros. One possible time where reversal will happen in the AM session is between 10:50 and 11:10. There's other times. There's 9:50, 9:50 to 10:10, and there's 10:50 to sometimes it's 10:30. The times are just probabilistic in a way. There's statistics that says this area is 60% of the times. 2 out of 3 will give a reversal. 30% of the times will be a continuation. There's some numbers like that. Now that we have gone through the setup, in theory, we're going to go and check it out exactly how it happened in one example. And then this will be the video that will be referred to the AFOB setup or the OP setup, right? And you guys tell me if you like this. Okay, let's go and see it. Okay, I will be looking at the 15-second charts because that's how I took this trade. And so there's a few ways to do it. Let's just see what happens if I turn on the market structure here. Yeah, does it tell us anything useful? Do we have superpowers? Okay, these are all deleted because of the... All right, yeah, we can just go through it. There's the open. That's the 930 open. Now I can add some, better line. That's 930 open. And what would you say, without having to teach and tell anybody anything, without knowing anything, you see a break of structure to the downside, right? That's the bearish line, right? And yeah, there was one also earlier here. But we do this together. I haven't reviewed this. So we break to the downside, just broad strokes, because this is the 15-second chart. Okay, we have a V-shaped recovery. What time is it? It's at 10. So 9:50 to 10:10 sometimes is a big reversal moment. And so we do reverse. Look, this was the pullback. We broke to the downside and we broke above it. So what is this? This is what I was telling you. This is the flip or a market structure shift, or or break of structure, or what do they call it? Chock. And look what's here. I was telling you that there might be an area responsible for breaking. We haven't. So if you zoom out, we haven't closed any bodies below here until this. So this wrinkle is at the area that was roughly responsible for breaking the structure. And it depends what you use for the high. You can use this one. And there is some art to this, to reading this, depending which week I pick or which fractal. You could say we violated this SNDR or not. But look, we did wick above 3 times above this area responsible for breaking the market breaking this level to the downside. So we broke to the upside. There's an official market structure shift to the upside. We sort of tried to breach this SNDR and we failed, and probably is the reason why we're moving down for a while and we come down. Now here's the key moment. You have to identify that in this zone, put a box around it. You have to identify that in this zone there is an origin, and you have to mark it. And if you want to take these insane explosive trades, you have to mark these origins. Okay, so we have an origin. The origin has a sweep here. I mark it usually like this. That's the sweep. And then we want the sweep to be liquidated with a double bottom. Where's the second sweep? That's a sweep. Call it double tap. Where is it happening? It's happening inside the origin. Okay. Did it do a flip? Yes. The full structural shift is up here, but there's also here a small order block. And is there an imbalance that's been created? Yes, there is. Here it is. I wonder how I know. I threw up the image of the trade. Actually, I opened it so that I can show you. So this is how my chart was on it. I'll show you. So I have an inversion here. All right. So I did take this trade as soon as the candle was up closing here. So I did enter here. And I had a stop 20 points. And this is certified and tracked. And I ran it until, I think I ran it, no, I wanted, so I got stopped here, I think, for 90 points or something. I was trailing it and I could not click the button in time for this. Would have been 115 points, and I got to here. How many are? Okay, it was, sorry, I said 6R, it was only 4.8. Okay, so, and there's a flip here. You could enter many places around here, but once you have identified the area, then it runs. Everybody was going short here. I mean, people not in my community, they were all going short. I am in contact with some ICT traders, very experienced, very profitable, and still people were going short here. So this is really a setup that sometimes catches even experienced traders off guard. Okay, what else did I want to show you? Oh yeah, that's proof that I took this. There it is. This is the one. This is how my chart was annotated. Exactly how my chart was annotated. Oh, I didn't mention the SMT. Right. This final detail that makes the entire setup way more high probability is when there is a divergence happening with the other index, the Standard & Poor's, the S&P. So when, in this case, ES was doing, instead of a lower low, a higher low, then you know that the elephant in the room, which is ES, was already starting to move up, and instead NQ did a final manipulation. And I'll show you, because I thought I was very well prepared. And I have it. So 1050, at around 1050, 1050, there you go, here. Look, NQ did this, while ES could not take this. That's what we call a divergence. The name in the industry right now is called SMT, smart money technique, and comes from ICT. So this divergence is very telling. It means there's still a manipulation in Nasdaq, but a lot of people are accumulating and buying here on ES. ES is bigger than NQ, and so the reactions are explosive. Okay, let me go back to the area. Oh my god, it's all zoomed out. It's messed up. All right. Okay. Here is my brief. We are 22 minutes into my explanation of the AFOB setup or OP setup. And I hope I can use this to point it to people that are gonna no, not the wrong one. No. This. I hope that this is where I will refer people when they ask me, what is this setup? How did you take this trade? What is the AFOB setup? What is the OP setup? This is the one video I will refer them to. I hope you enjoyed this. Please give me feedback. I enjoy doing this. Thank you. Like and subscribe. And ciao. I say ciao, arrivederci, buona giornata. And I talk to you soon. And the drop is coming. Loud music. 1, 2, 3, 4. And ciao.